Hello, everybody. Hey, it's Mark Johnson at Guaranteed Rate, and finally, we've got some really great news on interest rates. This week, we saw interest rates come down again here. Let's see. Let me just move it down here. We're at below 7% now. At 6.95 is the average Freddie Mac survey that they did last week. In reality, rates are probably about 6.625 at par right now. That's kind of where we're at. You notice the 15-year for some reason went up just a little bit, but the 30-year just keeps on coming down. And that's in part to some really great news that we got on inflation. We saw that inflation was much better than anticipated. And the Federal Reserve during their two-day meeting on Tuesday and Wednesday basically came out and said, that they think that they're done raising interest rates, although they've kind of backpedaled. Some of the Fed governors today have backpedaled just a little bit. But let's just kind of go look at what our good friends at MBS Highway thinks going to happen during next year. Is that there's a 19% chance that the Federal Reserve will lower interest rates in January. So I don't think they're going to do it in January, but there's probably a pretty good chance in March and for sure in May when they meet. So these are the times that they meet: March 20th, April or January 13th or 30th, 31st. Here. So I really think that interest rates, could start to come down in March. Now, is that a good reason for you to wait and buy in the spring? Well, the problem with that is that home prices right now are kind of in a good spot here, and they keep on going up, and they probably will keep on going up between now and the time that interest rates come down. But as soon as rates hit like 6.5 to 6.25, you're going to see a lot of people jumping in to the market. Now, let me just show you what the market is when it comes to let me just share my screen real quick and show you what the market's really doing. So when we're looking at the bond pricing, which means when this goes up, interest rates come down. You see that on Wednesday, bonds just really increased, and that's a good sign. And then again today, we've kind of struggled a little bit because of some negative comments from the Fed governors there. But you see that we've had a really nice run up. And then let me just show you the 10-year treasuries here. So the 10-year treasuries, here's Wednesday, here's yesterday. Today's kind of, just hanging in here. Not really moving very much. And we'll just kind of have to see what happens to interest rates. So I think the interest rates are going to keep on coming down. But what I think we should all be looking at here is what's going to happen when we see, interest rates at a place where people want to jump into the market and where they want to buy at 6.25. Maybe you're going to have a lot of competition. I would imagine there's so much pent up demand out there. I just know in my pipeline, there's a lot of people who've called me and said, hey, I want to buy, but not at 7%. Well, now that we're starting to see things come below 7%, and I believe that during the next, several months, we're going to keep on seeing inflation numbers come down. We're going to see even though we've got a pretty good economy, we're starting to see a lot more layoffs. And so listen to that when you hear the news. Listen to layoffs because that's going to actually help interest rates if you're in a position where you're secure in your job. Well, anyway, I just want to just let everybody know how much I appreciate you. We're today's basically. I just can't tell you how much I appreciate my clients and those who refer me and those who are my past clients. Have a happy holidays and take care of yourselves. Stay healthy and happy holidays. All right. Have a great day.